Hi everyone. Thank you for visiting our channel. Metal Mining Project Finance Model presents the business case of an investment in the construction and development of a metal mine and the sale of the metal mining products derived from it: gold, silver, copper, lead, nickel, zinc, before exiting the project after a set number of years. The model generates the three financial statements as well as the cash flows and calculates the relevant metrics: cash on cash, internal rate of return, payback period, net present value, debt service coverage ratio, loan life coverage ratio, weighted average loan life. The financing options for the project include 2 senior tranches, 1 junior tranche, as well as a working capital facility, and of course equity funding from investors. So, a quick overview of the model. In the Contents tab you can see the structure of the model, and by clicking on any of the headlines, to be redirected to the relevant worksheet. On the Conventions tab you are able to feed the general information for the model such as model name, responsible, timeline of the model and date and currency conventions. Additionally, there is a description of the color coding of the model in the same tab. Inputs are always depicted with a yellow fill and blue letters. Call-ups, that is direct links from other cells, are filled in light blue with blue letters, while calculations are depicted with white fill and black characters. There is also a color coding for the various tabs of the model. Yellow tabs are mostly assumptions tabs, gray tabs are calculations tabs, blue tabs are outputs tabs, that is effectively results or graphs, and finally light blue tabs are admin tabs, for example, the cover page, contents and checks. The construction tab contains the main investment assumptions, such as useful life of the project, depreciation method. The user can choose between straight line and double declining, the salvage value at the exit of the investment, the contingency percentage which will increase the baseline construction costs. Furthermore, the user sets in this tab the development fee, which is paid when the debt is drawn, the project management fee as a percentage construction costs. This fee can be paid on an annual or quarterly basis. Next, the user sets the project name, the project exit, in years after the construction, and the construction start date. Additionally, it is possible for the user to set the capex items on a quarterly items, the needed capex reserve account in terms of quarters, and their corresponding useful life. Finally, the user can set the timeline of the construction for each task, and their duration in quarters, as well as the cost per task. All the above are calculated and allocated in the Construction Calculations tab. Moving to the Financing tab, the user sets the percentage of debt financing, the construction costs, initial funding from equity, and the debt split between senior tranches, A and B, and junior tranches. The user selects the repayment method for the senior tranches, amortized or debt sculpting, as well as the repayment frequency, semi-annual or quarterly, and the balloon payment if any, up to 100%. The user then selects between fixed and variable interest rates and adjusts the corresponding rates for each of these calculations methods and for each tranche separately. The user also sets the debt repayment in years, the grace period, as well as the other financing fees, such as commitment fees, upfront fees, agency fees and other financing fees. Finally, the user sets the interest rate for the working capital facility. All the above assumptions are used for the calculations performed in the Financing Calculations tab. In the Commercial tab, the user can set or mind and the strip ratio, the grades for each metal, the recovery rate, and the payability. The pricing for each metal can also be set as United States dollars per kg, as well as the smelting and refining costs. The remaining items consist of operating project costs per ton, such as direct labor, digging, drilling, transportation, crushing, grinding, separation, other, and their escalation rate. Additionally, the royalties can be set for the net smelter revenue and the net operating profit. Finally, the working capital assumptions for inventory, receivables and payables days. All the above assumptions are used for the calculations performed in the Commercial Calculations tab. The Other tab contains tax assumptions, discount rate assumptions, dividends assumptions, and finally headquarters labor and sales and general administrative costs. The labor assumptions include headcount and salary for each position, as well as employment-related expenses. The calculations are performed in the same tab. After finalizing your assumptions, press the Calculate Financing button to update the Outputs tabs. Financial Statement tabs. Everything is aggregated here into the relevant statements: profit and loss, balance sheet and cash flow, both on a quarterly and annual basis. The valuation is performed both on an annual basis, by using the free cash flows to the firm, free cash flows to equity, dividends discount method. In this tab are calculated the enterprise value, net present value, the cash-on-cash multiple, the internal rate of return, and payback period. In the next tab, the ratio tab, the model calculates the debt service coverage and loan life coverage ratio, as well as the senior debt weighted average life. Afterwards, a series of ratios are calculated and a break-even analysis is performed at an EBITDA level. Graphs tab. Various graphs present the investment and operating costs, as well as the revenue potential. Then multiple charts present the performance of the project from revenues to bottom line, along with debt, assets, working capital and cash flows, which results in a valuation on a project basis, as well as on an equity basis, together with the internal rate of return of the project and payback period metrics. Executive summary. The summary page is updated with the main output metrics of the model, such as internal rate of return, shareholder value, cash-on-cash multiple, sources and uses, metal production, debt service coverage ratio, loan life coverage ratio, and other financing assumptions. The user can also set 3 different scenarios: base case, downside, and upside. The user can set for each scenario the percentage increase of the contingency, the grades improvement, the recovery rate improvement, the operating costs level, the interest rate basis points change, and the initial equity funding basis points change. After the user sets the assumptions and selects the scenarios, the user needs to press the Calculate Financing button. On the right side of the tab, the user can see the updated major metrics of the model. Checks, a dedicated worksheet that makes sure that everything is working as it should. And that's it. Thank you for your time.